So we've seen a number of our companies that have, interestingly enough, a very sustainable advantage and a very high focus on sustainable business practices do particularly well in Q1. I'd say in the past quarter to current quarter and going forward, a number of the issues that have come up in our ESG industry space are related to post the Paris Accord that took place last December, which was a very, very big event. It's the first time in 20 years that all the nations, 195 nations, have agreed that they want to keep global warming below 2 degrees Celsius or 3.6 degrees Fahrenheit, and that they want to reduce their carbon emissions, and they've all committed to do this. This is the first time the U.S. is also committed to do this publicly. So from our perspective as investors, knowing that the countries or the governments behind these policies around carbon reduction and preventing or slowing down global warming is something that we can find a lot of interesting opportunities in terms of our investment universe. But we can also be mindful of who is well positioned around carbon reduction and who is not. There are a number of companies that in our ESG separate accounts, as well as our sustainability leader strategy, which is our newest strategy, incepted about 1 year ago today, that have been very receptive and actually been very proactive about engagement with ClearBridge analysts as well as PMs. And so that we have companies who have engaged us for decades. One of those companies, for example, that are in many of our ESG strategies as well as our sustainability strategy, leader strategy, is Intel Corporation. It's a company that has been extremely innovative, has continued to raise the bar and the standards for its industry. Another company that we've recently met with, but we have met with for many times before, is Disney Corporation. They take their sustainability strategy very seriously, and they've come to ClearBridge to present their ideas, to share some of their strategy points, and ask for some feedback on direction. One of our companies that has done particularly well in Q1 is a company called Vestas Wind Systems. And Vestas is a global leader. It's been at the business for over 100 years of developing, manufacturing wind turbines, as well as service contracts. Some recent changes that we've made in the sustainability leader strategy included a new name that we added, a new company we added. It's called Becton Dickinson. It's one of the world leaders in, could be categorized as medical equipment. It's a company that we know is very stable. This is a company that is highly predictable, but it is continuing to grow, and it is very mindful of its recent merger and acquisition that it had with the second leading player. We knew we had a fair amount of high weighting in healthcare, biotechnology, innovative therapies and cures, and so to offset that, we wanted to trim a little bit on that, in that area, in that space, and add more on the medical equipment or stable growth. From our experience of managing ESG separate accounts for over 20 years, our experience has been that the ESG portfolios can perform as well, if not slightly better, during certain periods. They're particularly resilient during bull and bear markets, but during times of defensive times in the market, when the financial crisis took place earlier in a number of years ago, the ESG portfolio stood up quite well in terms of capturing downside risk. We've also seen many of our companies that are in the ESG portfolios have particularly high quality factors, so they tend to have lower debt to equity as a whole in the portfolios, and they tend to have a higher return on invested capital, which is another indicator of quality. So when we measure the performance of the ESG strategies relative to the benchmark or any other investment opportunities or options that clients can place their assets toward, we are thinking in our minds as managers that we need to find companies that not only are great ESG stories, but in particular are really good long-term investment opportunities.